Now let's prepare the budgets that lead to a budgeted balance sheet. The following information is taken from the operating budgets previously prepared for Noah's Boat Company. Budgeted sales were $200,000, $240,000, and $180,000 in January, February, and March, and budgeted materials purchases were $43,600 and $47,800 for January and February. The operating budgets for January and February show that direct labor costs will be $41,600 and $45,600. Total manufacturing overhead costs will be $20,800 and $21,300, including depreciation of $600 per month. And out-of-pocket selling and administrative expenses will total $42,000 and $46,400 for the 2 months. In addition, depreciation on selling and administrative facilities will total $2,000 for each month. The company collects 70% of credit sales in the month of the sale, 20% in the month following the sale, and the remainder is collected 2 months following the sale. Last year, sales were $80,000 in November and $90,000 in December. We're given the expected cash collection pattern. Management believes it will take 3 months to collect sales from a given month. The company pays for 40% of purchases during the month of the purchase and 60% in the month following the purchase. No discounts are given for early payment. Purchases during December of last year totaled $40,000. This is the expected payment pattern, so we can see that management expects to pay purchases over a 2-month period. The year-end balance sheet for last year showed a cash balance of $6,000, an accounts receivable balance of $35,000, an accounts payable balance of $24,000, and retained earnings equal to $149,600. So these are the balances that we ended last year with, which means for these balance sheet accounts, this will be the beginning balance. You'll either be given select year-end balances or the balance sheet as of the end of last year, or if it's a new company, you know that the beginning balance is 0. Management will implement a new policy that requires a minimum cash balance of $20,000 to be maintained at the end of each month. A line of credit is available at a local bank that allows the company to borrow up to $25,000 at an annual interest rate of 6%. No loans were outstanding as of January 1st. Any borrowing occurs at the end of the month, and all principal repayments will begin next quarter. Interest owed will be paid at the end of each month. Equipment will be purchased in January for $10,000 cash. So you can see here we've got our cash management policies. We'll reference this information as we prepare several budgets, so be prepared to look back at this information.